Hello, and welcome to 5 Minute Math. Today we are looking at the third grade concept of personal financial literacy, credit. This is standard 3.9D in the great state of Texas, and we are using item number 24 for the 2024 released STAAR test. If you haven't done so already, please go ahead and take a moment to pause the video, work this problem out on your own, unpause it, and we will look at our answers together. All right, this problem is either going to be really simple or really difficult because it all revolves around this one word, credit. If you know what this word means, you can easily find the answer and move on. If not, we got to do a little bit more work. So let's define this word, credit. All right, so credit is something that you can have as a consumer, as someone who buys things. So it is the ability or your choice in how you can purchase things. And so we'll say purchase goods or services. Goods are things you buy like TVs and phones. Services are not necessarily things, but you pay for them. Like you pay for an Uber, you pay to get your nails done. You're not buying a thing, you're paying for someone to do something for you, right? So ability to purchase goods or services without immediate payment. Right? So you don't necessarily pay them at that moment when you buy groceries and you pay for an Uber. You don't necessarily pay for that service immediately. What you do is you think of it like a loan. You take a small loan from someone else who is going to pay that for you. So, a lot of you, when you think of the word credit, you should think of credit card. And that's a good association. So a credit card, right? Some of the major ones are going to be Visa, MasterCard, you have American Express. There's many. Sometimes you'll get a credit card from just a store itself, right? You might get a department store credit card. You might get a credit card for a gas station if you purchase a lot of gasoline. What you end up doing is you use that card, Visa or MasterCard, right? If you're using a credit card, they pay for the goods or services. So if you go into Walmart, you buy $50 worth of groceries, you walk out and you use a credit card, you haven't paid Walmart anything. You swiped your card, Visa or MasterCard paid Walmart. So in Walmart's mind, everything is great. They got their money, everything is fine. Now you owe Visa or MasterCard. You took a loan, a short loan from them, and usually it's at the end of each month. You have to pay that back. And if you don't pay it back in full, then credit cards start charging interest. This is not like a debit card. So a debit card is different because when you have a debit card that is tied to your checking account, and that comes directly from the bank, you have to have the money there. You can charge and charge and charge and charge on a credit card without having any money in the bank, which can be great, which can also be scary if you don't have money to pay it back at the end of the month because then you start getting charged interest. So that's what credit is, and credit card is not the only way to use it. You also have to have good credit to get a loan to buy a house or buy a car because most people can't pay for a car or a house with cash. They pay a bank monthly payments to kind of pay back a loan that they take out for that car or that house. That's credit. So let's take a look at our examples here. When Dante saves $100 per check, that's not credit. That's income. He's earning money and he's saving it. Okay, so you can think of that as income. If you want, you can classify it as savings. But either way, that's not credit. Bailey budgets $85 for groceries each week. She's not earning anything. She's not spending anything. Budget means it's a plan. So she's planning on using $85 each week from her paycheck to buy groceries. That's also not credit. Maria borrows $400 for repairs. There we go. Look at that. Kind of like a loan. So she's going to borrow 400 from someone or some company, have them pay for the repairs, and then she will pay them back. And then you earn 250. Nope, that's also going to be income. So the answer here is going to be C. Borrowing $400 for car repairs is an example of credit.